Welcome to our latest video on the fine line between tax avoidance and tax evasion. As a business owner or financial professional, it's important to understand the various legal ways to minimize your tax burden. In this video, we'll be discussing the most common strategies businesses use to avoid paying taxes, as well as the potential consequences of using these methods. One of the most common strategies businesses use to avoid paying taxes is to take advantage of tax havens. Tax havens are countries with low or no taxes that businesses can use to reduce their tax burden. These countries attract businesses by offering low tax rates, financial secrecy, and minimal regulations. Common examples of tax havens include Bermuda, the Cayman Islands, and the British Virgin Islands. In these countries, businesses can set up subsidiaries, which allows them to take advantage of low tax rates, while maintaining their main operations in a higher tax jurisdiction. However, it is important to note that while tax havens can help businesses reduce their tax burden, they can also be used for illegal activities such as money laundering or tax evasion. Another common strategy businesses use to avoid taxes is to engage in transfer pricing. This is the practice of shifting profits to subsidiaries located in tax-friendly jurisdictions. This is done by artificially inflating the prices of goods and services sold between subsidiaries, which reduces the profits and taxes of the subsidiary located in a higher tax jurisdiction. Companies use this strategy to take advantage of lower tax rates in different countries, which can result in significant savings on their tax bill. Another strategy to avoid taxes is through the use of tax credits, deductions, and other incentives offered by the government. These incentives are designed to encourage businesses to invest in certain areas, such as research and development, or to take on specific projects like environmentally friendly ones. By taking advantage of these incentives, businesses can lower their overall tax bill. These incentives are offered to companies as an incentive to encourage them to engage in certain activities that are deemed to be beneficial to the economy or society as a whole. It is also important to note that some methods businesses use to avoid taxes may not be legal. For instance, hiding income or claiming false deductions are considered tax evasion, which can result in penalties, fines, or even criminal charges. Using illegal methods can cause serious legal and financial problems for a business, and it is important to understand the difference between legal tax avoidance and illegal tax evasion. Furthermore, it's also important to note that while avoiding taxes is legal, if not done ethically, it can harm the community and it can be perceived as unfair by the public or other businesses. Many companies are criticized for avoiding taxes, and that could damage their reputation and the public's trust in them. It is important for businesses to be transparent about their tax practices, and to ensure that they are paying their fair share of taxes. In conclusion, there are many legal ways for businesses to minimize their tax burden, but it's important to use these strategies ethically and legally, and understand the potential consequences of using these methods. We hope this video has provided you with a better understanding of how businesses avoid paying taxes, and how you can reduce your own tax burden in a legal and ethical way.